Good morning. I'm Tom Bizzuto, Chair of the Baltimore Community Foundation's Board of Trustees. I am very happy to welcome each of you, our BCF fund holders, donors, and professional advisors, to our 2021 investment briefing. The prudent investment of BCF's endowment is a critical element of how the Community Foundation serves Baltimore. Investing with a long-term time horizon to help secure the future of our community is central to all of our deliberations. BCF is very fortunate to have a group of distinguished investment professionals serving as its investment committee. Under that committee's direction, we have been using an indexed investment strategy for slightly more than 5 years. Today, we will share our results for the past year, as well as the past 3 and 5 years, as of March 31st. In addition, 3 years ago, we reported that we were rolling out our impact investing program. Today, we will also share with you the outcome thus far of those investments. But before diving into all of that, we have a special item on today's agenda. That is to honor those professional advisors who have done an exceptional job of promoting philanthropy in their practices. Shanacia Sauls, BCF's president, and John Gilpin, BCF's director of gift planning, will do the honors. Shanacia?
Thank you, Tom, and good morning to everyone, advisors, donors, residents, partners, and friends. What a difference a year makes. Instead of being gathered together over breakfast and chatting up new and old colleagues, we're watching on a computer screen and most likely in our homes. Who knew? Please know a million details tended to by careful and committed hands and eyes made this possible. And it is just one of the many ways that BCF has learned to pivot and to develop new muscles in response to these times. Today, we're going to give you a glimpse into our numbers, both strategy and results. But beyond that, we're going to share with you the people behind the numbers, inspiring other people and inspiring change in Baltimore with BCF as a partner. Our first such people are our professional advisors. Comprised of attorneys, financial advisors, and accountants, our Professional Advisor Recognition Society is the Baltimore Community Foundation's way of recognizing advisors who demonstrate commitment to Baltimore by working to advance philanthropy and encourage charitable giving. There is such an amazing group of civic-minded professionals and people in this society. BCF is so proud to work with them, as well as with all the advisors who support their clients in discussions of charitable giving throughout the year. Today, we want to honor both our 2020 inductees and the 2021 inductees to our Professional Advisor Recognition Society. To do the honors, I'm delighted to introduce my colleague and BCF's Director of Gift Planning, John Gilpin, who most of you know. John is, among many things, our primary contact for professional advisors, helping them to serve their clients by partnering with BCF to build a better Baltimore. John, please introduce our 4 honorees.
Thank you, Shanacia. I am very pleased to introduce the 2020 and 2021 inductees to our Professional Advisor Recognition Society. Byron Deese is a Relationship Development Manager at Glass Jacobson Financial Group, where he consults on retirement plans and specializes in strategies for small businesses and their employees. Byron has referred several clients to BCF, 3 of whom have opened fast-growing donor-advised funds. In just a few short years, these funds have granted more than $190,000 to local community-based organizations. Byron is active with, among others, the Baltimore City Community College Foundation and the Abilities Network. He lives in Hanover with his wife, Maria Campbell, and his daughter. John Poulton is a strategic advisor at Brown Advisory who specializes in estate, charitable, and income tax planning services for his clients. John has referred several of his clients, who've established donor-advised funds at BCF. And John also has his own family fund with us. Combined, these funds have contributed hundreds of thousands of dollars over the last decade. John has served on numerous boards in the community, including, among others, U.S. Lacrosse, First Fruits Farm, and St. Martin's in the Field Episcopal Church. He resides in Severna Park with his wife, Anne Marie, and their 2 daughters. Tina Lignas is an attorney at HWK Law Group, specializing in estate planning and administration. Tina is a strong advocate for BCF and has referred several clients to us. Tina always asks her clients whether they have any charitable organizations they would like to help in life, at death, or both. One such client has established a donor-advised fund at BCF to make an impact today, while naming BCF as the beneficiary of her IRA to ensure that her legacy of generosity lives on. Tina lives in Lutherville with her husband and 2 children. Randy Britton has had a long and distinguished career as a financial advisor, initially with Ferris Baker Watts, which many of us recall later became RBC. At RBC, Randy established the Brinton Dingle Group. In addition to his own family's donor-advised fund, Randy has referred or is a professional advisor to no less than 6 BCF donors, fund holders, and Legacy Society members. Randy served as chairman of the board of directors of the Maryland SPCA for 15 years and currently is president of the Maryland Club. Randy lives in North Baltimore with his wife. Now let's hear from our Professional Advisor Recognition Society inductees about why the Baltimore Community Foundation plays a central role in their practices when they initiate the subject of giving back to the community.
One thing that we all share about Baltimore is a love for this city. And everyone who I talk to, whether they live in the city or work in the city, really sees the potential that this city has. And I truly believe that Baltimore Community Foundation plays a big role in helping to connect the dots for those people who have resources and they care about the community, but are just trying to find new ways to support it. It's easy to work with BCF because they're providing much of the administration on which organizations to fund. And many of my clients already have organizations that they support individually, but the donor advised fund model and some of the other funds allows them to package them into one portfolio and to be able to support it directly. Working for a tax advisory firm, there's always questions about tax strategies and charitable organizations. The first thing I do is tell them about Baltimore Community Foundation.
I think a lot of people want to do good for cities and organizations, but they don't know how to do it. And the Baltimore Community Foundation can narrow down their choices for them, give them recommendations, and they are very comfortable with the Baltimore Community Foundation because they have no axes to grind. They are providing my clients with a smorgasbord of possible organizations that they might want to support. And then my clients can then narrow it down as they ask more questions from the Baltimore Community Foundation, and then they can end up deciding the 1 or 2 organizations that fit what they are trying to do to help Baltimore City. My clients are very excited about it. They're all interested in giving back and helping the city. They don't know how to do it, and this is the easiest and best vehicle for them to do it with a great deal of confidence.
My clients feel wonderful knowing that they can help the Baltimore area. It's a huge benefit to be able to help locally and not just be thinking about these larger organizations where they don't feel the impact as much. Here they can actually see what's going on. They live in the neighborhood and they see the improvements happening on a daily basis. My clients choose to go with BCF because it's just so easy. They provide so much flexibility. For instance, BCF has a donor advised fund where clients can donate their funds to a fund overall, but they don't automatically have to decide which charities they're actually donating to. So they can create the fund and donate over time, and they can change the charities as they go. And even after their death, their family members can decide which charities to donate to.
The topic of charitable giving and philanthropy comes up in my conversations with my clients often as a starting point in our discussion in terms of tax and estate planning. By virtue of the Baltimore Community Foundation giving back to Baltimore, it's very easy for me to recommend the Baltimore Community Foundation because Baltimoreans are incredibly loyal and supportive of the community. And by virtue of that, it's really an easy recommendation to make. When I start the conversations with my clients about charitable giving, the first organization I think of is the Baltimore Community Foundation.
It's been my personal experience that in life, the important things are not what we have accomplished or done ourselves, but it's what we have done to help other people and make life in Baltimore City better.
Thank you, Byron, John, Randy, and Tina. Now I would like to introduce Patty Baum of RBC Wealth Management, Chair of the BCF's Investment Committee.
Thank you, John. Who knew last year when we decided to cancel the investor briefing due to the outset of COVID that we'd be here a year later? But thanks to the diligence and creativity of our staff, we're able to bring you this virtual briefing. I'm so grateful for all the work they've done to make this happen, and my only hope is that I can see all of you in person next spring. The BCF Investment Committee is made up of a number of seasoned investment professionals with varied experience. About 5 years ago, at this briefing, our committee announced the decision that we were going to adopt a passive investment strategy. At that time, I advised that we had a big ship to turn after having invested with active managers for so many years. But we were committed to shifting gears. We as a committee set up a target asset allocation with 70% invested in stocks and 30% invested in cash and bonds. We then established a rebalancing discipline. This means we rebalance asset classes if they stray too far from our stated targets. This shift to passive resulted in much lower investment costs. In fact, we lowered our costs by almost 80 basis points, or 0.8%, which amounts to about $1 million in annual cost savings. And now we have a full 5-year track record. So I'm happy to report that our efforts have really been rewarded with strong performance. We certainly know that passive funds won't always outperform active management, but we also know that this is a really hyper low interest rate environment, so keeping costs to a minimum is an imperative. So on the first slide, you'll see the returns of the investment pool as of year-end 2020. And then I'll get to the first quarter of 2021 in just a minute. But for the full year 2020, the investment pool was up 16.3%, compared with a return of 14.3% for the benchmark. Over the last 3 years, we've annualized at 9.6%, and over 5 years, 10.5%. We're still below our benchmark for the 10-year period, but remember, we've only been passive for 5. And we're confident that as we continue our approach, this too will improve. The BCF pool finished the year 2020 at a total value of over $176 million. Note also on this page, we just highlight the performance of the impact pool for the last year, which was up 4.9%. Our aim with this money is to beat the 90-day U.S. Treasury bill plus 1.5%, which we did achieve last year. This benchmark was up 2.2 for the year. Since inception, the impact pool has had an annualized return of 3.5% versus 3.1 for the benchmark. So now let's take a look at our performance for the first quarter of this year. As you can see, the pool was up 3.1% during the first 3 months and up a remarkable 40.4% over the last 12 months. But we all know we were in a deep hole last March, so let's just disregard that number. But take a look at the 3-year number, up 11% versus 10.2 for the benchmark, and our 5-year number is a positive 10.9%, again beating the benchmark. For the first quarter, the impact pool was up 0.5%, and for the full year, this part of the portfolio was up 4 versus 1.6 for its benchmark. So it's hard to believe, but we now have a full 3-year track record for the impact pool, and we annualized at a rate of 3.5% versus 3 for the benchmark. On the next slide, we have a review of our target asset allocation for the investment pool. Our committee originally set bands for each asset class. In other words, we set a lower boundary and an upper boundary for each asset style or class. So let's look at U.S. equities as an example. We have a target asset allocation of 38% for U.S. stocks. So if our U.S. stock portfolio goes below 32% or above 44%, then it's our policy to balance the portfolio back to the target of 38. Often, the cash inflows and outflows do the balancing for us. But from time to time, there's a big market dislocation in one way or another. And at those times, we balance back to the target. So you might have heard me say this before, but never did this rebalancing process prove itself more than on April 1st of last year. Over the 20 days, about 20 days in March of 2020, the market fell about 34%. Our allocation to stocks fell way below our target, while bonds were much higher than our target. So, based on the process, we moved about $7.8 million out of bonds and cash and into stocks on April 1st. I got to tell you, that was really hard to do. But as we all know now, the timing was impeccable. Lucky, but impeccable. This is what taking the human emotion out of investing can really do. Like, no one knew on April 1st how long the pandemic would last, and we certainly did not expect the kind of rebound we had. So we have a strategy, and the last year that strategy really worked to our and your benefit. The next slide shows the performance of our impact loans. I want to go back just a minute and remind all of you about that portion of the portfolio that we call our impact pool, or Invest for More. In June 2017, the BCF board approved a 4% carve-out, which at the time amounted to about $5 million, which we could commit to impact investing. So that number is now around $6 million because of the growth of the overall pool. At the outset, we had several objectives with this pool. One, we want to align more of our capital with BCF's mission. 2, to generate a benefit for the Baltimore community, as well as generating a financial return. 3, to further our commitment to racial equity and inclusion. And finally, to differentiate BCF from some of our competitors. We believed at the time, and we still believe, that the problems facing Baltimore are bigger than what traditional philanthropy can solve. And many of our donors expressed an interest in investing through community partners in areas of local need. We heard through many of our stakeholders that the lack of affordable capital was an obstacle for many folks in Baltimore, particularly for people of color. So this slide shows the investments we've made over these last 3 years. Now, I'm not going to go into the specifics of each investment, but you can see we have a breakdown of loans that we've made and the overall performance of 4.9% for the year. And on the next slide, the returns are updated through the first quarter of 2021. The amount of money we've invested is roughly $3.7 million, with about $730,000 committed but not yet deployed. This leaves us with about $1.8 million left to invest, based on the approximate $6 million that's allocated for the impact pool. So as a way to try to mitigate risk, we have set out to diversify the portfolio, just like you would a regular portfolio, but by social outcome. So you can see here that about 25% of the portfolio is invested in affordable homes and about 22% in affordable rental housing. We've lent about 22% of the portfolio to small businesses. These are businesses, for example, whose owners don't have access to bank loans. We've also been exploring opportunities in education and in environmental impact. We're often asked how people can participate in this pool, so we want to highlight on the next slide. One, you can make a donation to invest for more fund, and we have had a number of these to date. Thank you. Two, you can designate a portion of your donor-advised fund to the impact pool, and we just request that piece, the 7-year lockup, due to the nature of the investments are illiquid. Or three, you can open a new donor-advised fund specifically to invest in this pool. Either in all or some of our investments, you get to choose. As you might know, the BCF vision is for a Baltimore that boasts of a growing economy where all people have the opportunity to thrive. Our staff and our volunteers organize our grants, our initiatives, and advocacy around this vision. And now, some of your investment assets do too. I'm delighted today to introduce Tiffany McGee of Pivotal Advisors. Tiffany is one of the founding partners of Momentum Advisors and the CEO and CIO of Pivotal Advisors, which serves institutional investment clients. Pivotal Advisors offers solutions for institutions wanting to make a greater impact with their investment portfolios. Pivotal is the only Black, woman-owned, and Afro-Latina-owned SEC-registered investment advisory firm. Tiffany frequently speaks on topics such as ESG investing, impact investing, ERISA, asset allocation, alternative investments, and diverse ownership and asset management. ESG, for those of you who don't know, means that you're using environmental, social, and governance issues when you analyze stock portfolios or bond portfolios. Tiffany's been invited to speak at conferences such as SOCAP, the Congressional Black Caucus Foundation, the National Women's Studies Foundation, and the Florida Alternative Investment Association. And you can also see her weekly on CNBC's halftime report at 12 noon Eastern. Pivotal Advisors was selected to provide investment reporting for BCF in 2020. So Tiffany, thank you for being with us.
My pleasure.
What are you seeing in terms of trends in institutional consulting?
Yeah, so we're seeing more flows into ESG strategies than ever before. And so just to be clear, ESG is environmental, social, and governance. And what it stands for, a lot of people think that it is values investing or socially conscious investing, and it can be, but really the definition of ESG is utilizing responsible environmental, social, and governance metrics of a company or strategy, and kind of lining them up alongside the traditional financial metrics that as investors we would use to make an investment decision, like performance and risk factors like alpha and beta, standard deviation, all those nerdy metrics. And the whole idea is that companies with those responsible ESG metrics tend to outperform. And so, there's even more evidence than that ESG does not sacrifice return, but instead tends to identify returns and also helps to mitigate risk in a portfolio. And also, there are more ESG metrics particularly with the S and the G than ever before. So prior to 2020, we saw a lot of data, a lot of metrics on the E, that environmental piece. But in 2020, with how companies have reacted to COVID-19, did they lay off or furlough their employees? Did they prioritize the safety of their employees and their customers? We're seeing more metrics on the S portion of that. And then also, with the heightening, what I call the heightening awareness of the Black Lives Matter movement, we saw more companies than ever before, making statements. And they weren't talking about peace or can we all just get along. They were making these bold statements and saying Black Lives Matter. And in addition to making the statements, a lot of companies were coming back and backing those statements up with actual action. So now we see the S kind of affecting the G, right? So we saw commitments to diversity in hiring and board seats, and also in the vendors that organizations and companies select. I think now more than ever before, organizations, institutions are aware of the power that they have in terms of the impact of their investment portfolio as well.
So I'm curious, Tiffany, how did you get started in this business?
So I started my career at Merrill Lynch down on 100 East Pratt Street here in Baltimore, and I actually graduated from Morgan State University. Then I worked for T. Rowe Price on the institutional side, and also on the institutional side at TIA. I managed a territory for TIA, then TIA Craft. And then a friend actually that I graduated from Morgan State with came to me and was starting a investment advisory firm and asked me to join him as a partner and really create the firm's institutional practice. And so we did that for 8 years. And then in 2020, I decided to spin off that institutional practice into Pivotal Advisors. And so, we were really lucky because of my work with CNBC. I was able to launch the firm on the halftime report on CNBC. And the response was really amazing. And, I was aware throughout this time that this felt like, something bigger than the start of a new investment firm, or the start or something bigger than just me starting a business. We're the first African-American woman-owned and first Afro-Latina-owned institutional investment advisory firm in the country. And we're pretty proud of that. And so when Baltimore Community Foundation asked us to participate in their request for information, we were really excited. I'm from Baltimore. I'm born and raised in Baltimore. I still live here. So you all have a very special place in my heart. And when it was over, what we really understood was that we were competing against multiple firms, some of the largest firms in the country, and also some locally based firms as well. So, in preparation for this meeting, we really, really prepped because I really wanted to get it right. And we won. And so it's not lost on us that you guys had a choice. And we were really excited to have been selected. And we really look forward to what we can bring to the table and what we can add to your portfolio.
Thank you so much, Tiffany, for being with us. Shortly after BCF committed 4% of the BCF pool to impact investing, we invited donors to join us in making a local impact. So as I've said before, there are 3 ways you can do so. Any donor can participate in impact investing by making a donation to our Invest for More pool or fund. 2, our non-endowed donor-advised fund holders can invest a portion of their fund balance in the BCF Impact Pool. Or 3rd, beginning this year, we have opened donor-advised funds specifically for impact investment to support donors that wanted to make an investment in one of the loans previously approved by both the Impact Subcommittee and the Investment Committee. Our final presentation highlights the need in our community and how BCF can serve as a conduit for impact investment that provides tax savings to our donors while making affordable loans deeply needed by our community partners. We hope you find this opportunity intriguing. We've invested with them, and we look forward to having a deeper conversation with you. Thank you so much for attending today's investment briefing. We really appreciate being your philanthropic partner.
When people ride through the 400 and 600 block of Biddle Street, I'm sure they're thinking, this is the worst neighborhood in the world. I would never live here. But what they don't know is that we've been working diligently to build up Johnson Square and make this one of the best neighborhoods in Baltimore City.
Rebuild is an impressive organization doing important work, hard work in Baltimore City. And it's working on neighborhoods, to revitalize neighborhoods. And that's what the Baltimore Community Foundation is looking to do too. Targeting neighborhoods to make a difference within Baltimore. And Rebuild is doing that.
I think there is a renewed sense of energy in the community. We still have pockets of challenges. However, a community that was over 40% vacant is now, the vacancies are down to about 3%, which is significant to bring new people into the neighborhood and organize them around keeping the neighborhood safe.
We're really excited about Johnson Square for two reasons. One, it's a place where the community members came to us and said, could you help us? You have the tools to make the change we need. And secondly, its location is unbelievable. It's located between Penn Station, the major transportation hub, and Johns Hopkins, the major employer. When you couple that with the strategic capital that BCF gives us, you can make a change, and you can make a change that's different than usual. It's not ministering to the symptom, it's actually going to the root cause of the problem. When all of those things happen together, you change all of Baltimore for the better.
Investment in Johnson Square was the missing link. There was no investment. It was a redlined neighborhood. Nothing was happening here. But now that we have been able to get some investment, of course we need lots more, we will be able to achieve our goal of having one of the best neighborhoods in Baltimore City.
Rebuild Metro is a great example of BCF's local impact investing. Donors can choose from the investments in our impact pool that align with their vision and mission. BCF manages that investment over its lifetime and keeps the donor informed. In the end, when the dollars come back, the donor can choose whether to make a new impact investment or to use it for grant making. That's double impact.
We have invested in Rebuild Metro because we want to participate along with the Community Foundation, an organization that we have been affiliated with many, many years, for the betterment of Baltimore. We love it. We have invested our businesses here, and we feel strongly that it can improve.
The Community Foundation has a great reputation of doing due diligence. They do it for our family foundation, for entities that we support. When they said they were going to do it with Rebuild Metro, we said, you've done the due diligence, you think it's a great thing to do, it fits with our values and interest in improving our great city, and if you're doing it, we're all in.
We first heard about Rebuild Metro at a presentation at the Church of the Redeemer.
And what we found was a really quite thoughtful and original and effective design that was ready to go. And we looked at how might we participate in this, because it's about time to do something, not just talk about how somebody else should do it. And what we got was a lot of help from the Baltimore Community Foundation, which eventually put together something that I believe they'd never done before, but it was a way of making it work. And they did, and we did, and there it is.